This is your brain on risk. This is Mind Over Money, the podcast where Kevin Cook exposes the psychology of investing.
Welcome back to Mind Over Money. I'm Kevin Cook, your field guide and storyteller for the fascinating arena of behavioral economics. One of the books that was formative in my understanding and adaptation of behavioral finance, basically the cognitive bias work of Danny Kahneman, who won the Nobel Prize in 2002, was the book Against the Gods, The Remarkable Story of Risk by William Bernstein, published in 1996. As the Amazon description reads, Against the Gods chronicles the remarkable intellectual adventure that liberated humanity from oracles and soothsayers by means of the powerful tools of risk management that are available to us today. Ironically, even if it had been published a decade earlier, it probably still would not have helped the geniuses at long-term capital management, who in 1998 suffered one of the biggest hedge fund blowups for the 90s after their PhD calculated bets on global interest rates went horribly wrong. And I should note that the bailout from the Fed for that was like $5 billion, which is, that became sort of a sneeze after the great financial crisis of 2008. But at the time, it was a big deal. And I forget the author's name. Maybe it was Roger Lowenstein who wrote the book When Genius Failed, which was about LTCM. So I wrote about this in my first article on behavioral finance topics in 2008, and that article was titled Mental Models of Financial Sabotage, where I profiled several of the biggest rogue trading events of the previous 13 years, from the implosion of the world's oldest bank, which was Barings, a British bank, in 1995, to the shenanigans being newly discovered in 2007 with the CDO hedge fund crisis and the mortgage subprime issues. But even more important than the risk theme in Against the Gods, Bernstein introduced me to the foundational story of probability that occurred amidst the friendship and letters between Blaise Pascal and Pierre de Fermat in the 1650s. So a little bit ago, but as math advanced, it was also really curious to me that we really hadn't discovered the foundations of probability that made Wall Street and Vegas what they are until the 1650s. So in the 90s, I had read all of the Jack Schwager Market Wizard books, and all those tales of market highs and lows, fortunes won and lost, they all had several themes in common, and I call them the 6 keys to the kingdom of trading success: psychology, systems, probability, consistency, discipline, and risk management. Like every story from those traders, they all had at least 4 of those elements. And those were the 6 ones that I kind of pulled out. And probability became one of the most fascinating areas for me, precisely because I was so unskilled at using it in high school and college. In fact, when I entered financial markets at the age of 29, I realized I had been allergic to algebra. And so I set out to learn all I could as quickly as possible so that I could become an independent trader myself. The key to success for me here was to use the story of Pascal and Fermat and their gambling friend, the Chevalier des Mers, to pull me into the meaning of their discovery. Because staring at equations still made my head spin until I discovered sort of the magic behind basic algebra equations. And then it was like a whole new world opened up to me. At first, I was confused by their discovery, though, I have to admit, because their solution was to multiply by the probability of something not happening. And that made my brain hurt a little bit. But I kept digging and trying the equations myself until it clicked. I even taught myself to calculate standard deviation on the back of an envelope. So I could suddenly explain mathematically and precisely how Vegas made money consistently on roulette. And this equation also became the foundational calculation for evaluating the long-run success of any trading system or any trading results. So I learned the foundational principles and disciplines of trading and investing success by focusing on core skills and habits for long-run success. And it's not much of a stretch to see how most of this wisdom could be applied to other areas of life, like building a career, running a business, or just running your personal finances. But in almost all cases, it becomes essential to have the right tools, the right peer group, and the right coach who will push us to do the things that we need to do in advance. When I was on the trading floors of the Chicago Mercantile Exchange, which is now just called CME Group, I surrounded myself with super smart, super successful traders, and I modeled their behaviors and thought processes. I also observed many traders who were chaotic and reckless, and that taught me a lot as well. So when it comes to personal finance, there are plenty of gurus out there, from Dave Ramsey to Susie Orman. But I doubt they have what my guest today has in terms of experience and tools. Today, we'll introduce Mind Over Money listeners to a financial advisor who combines the best elements of coaching and a rich platform of strategies and decision tools to get your money game in top shape. Right after this quick break, we'll meet Mark Harvey, a 30-year financial professional who has served every area of consumer finances. And he's got some of the top fiduciary credentials, including Registered Investment Advisor, RIA, and the highest advocate role you can obtain with the IRS to serve as clients, that of the enrolled agent. I'll be back faster than you can spell amortization. Today on Mind Over Money, we're talking to Registered Investment Advisor and IRS enrolled agent Mark Harvey. Mark is the creator of the Harvest Plan software platform, which is the best, most complete portal I have ever seen for managing your money game. From mortgages, credit, taxes, and debt elimination to savings, investment, college planning, retirement, you name it. And there's a reason they call him the MoneyPlan coach, because every aspect of your financial life includes step-by-step video tutorials where Mark walks you through how to use the system to organize your total money game. So I'm excited to have him on the program and dive into how this amazing platform, the Harvest Plan, helps us get our money game tuned up, turned on, and ready for anything. Mark, welcome to Mind Over Money.
Hey, Kevin, how are you? Thank you for inviting me.
Oh, yeah. Super. This is going to be a good conversation because I've never had somebody on to talk about, having a set of tools and strategies, for some of the most important work we do in our life. So, it's not just the tools and the strategies. You have a whole philosophy behind it, and we're going to get into that. So I want to start by asking you to tell our listeners, let's just identify the sort of the elephant in the room for a lot of people. What are the three biggest mistakes you think people make when it comes to their finances?
Three biggest mistakes. That's a good question. One that immediately pops into mind is just short-sightedness. And I mean short-sightedness in two ways. One is people tend to focus on short-term versus long-term. And so that sense of short-sightedness. But there's a second part of short-sightedness, which is they focus on small picture items and instead of big picture items. And I think it's happening more and more due to the Snapchat, Twitter culture, where people just see a topic and they glom onto that without realizing how that fits into a broader, larger, big picture that, a quality CEO would look at. So short-sightedness, I'd say a big one is not doing the math. And I don't think that's because people really don't think they should do the math, but it's just some people hate the math, number one. Two, they don't really know which math to do. So what they do is the math that makes the most sense to them, just so they can justify and make things work in their own head. Whereas oftentimes, even very intelligent people aren't asking the right questions and doing the right math. The other reason they don't do the math is really for lack of tools. They don't really know how to do some of the complex math, which is part of the reason we built the Harvest Plan, to help people do the right math, do all the math and do the right math, and for even people that hate math. And you know what? Two others I would just pop in there. One is just lack of effort. We're good at our health or our jobs or our sports or our music or whatever interest we have because we love it and we put a lot of effort into it, even relationships. But you know what? The people that really do well financially there are people that put a lot of effort into their finances. It's not a surprise, that lack of effort is really, in my opinion, a great mistake that people make. They just assume they're doing things okay. And I'm going to throw one more in, which is disorganization. You have no idea how much time and money disorganization costs people, and they don't even know it. But I can see it as a professional. Yeah. So
All right, great.
there's four. I give you 4 instead of 3.
Yeah. Hey, I like the bonus already. Short-sightedness in a couple different ways, and then either not doing the math, not being interested in it, or just not having the tools for it. And I know we're going to talk more about that because I've seen your platform and you've walked me through all the different calculations it can do. Effort, and I know you're not here. I know you didn't come here to shame us and make us feel guilty about not putting effort into our finances, but it does. It's like you said, we have a lot of passions in our life, and we kind of put that one off to the side and think it's like cleaning out the garage. Who wants to clean out the garage, right?
No. And most people feel like it's just kind of happening automatically. Okay, well, I have a 401k. Okay, well, what exactly are you doing there, and what's in it, and where is that exactly taking you? So it feels like we're doing a lot of stuff when we're really not paying close attention and learning and growing in that discipline. Yeah.
And then the fourth thing you brought up was, disorganization. And, obviously that implies the virtue of having some kind of organization. And that's what your software does. So on your website, you've got quite a library of educational articles and videos. And I noticed one consistent theme where you point out how the financial advice world, from banks and mortgage brokers to insurance and investments, they don't necessarily have our best interest at heart. Can you give us a couple of examples where you see sort of hidden agendas as the most damaging for unsuspecting consumers?
Well, there's always the very obvious one, which is credit cards. And it's just amazing to me that we're asked what's in our wallet, and we're hit with so many offers for credit cards. And where do they come from? They come from the major banks. So that's got to tell you something. If the banks and the big financial institutions are pushing credit cards, spending billions of dollars to try to get us to use more credit cards, you have to wonder, well, do they really have our best interest? So that's a big area. It's obvious in my opinion. The second one that just pops into mind is annuities. Annuities can be a good tool for the right person at the right time for the right reason. The problem is someone starts hearing about or talking about annuities and even certain types of insurances, and then they just look into, okay, which one's right for me without really understanding the details, what's involved, how it really compares with alternatives, and not to mention the commission structures, which are super, super high for a lot of annuities.
Yeah, well, the credit card one for sure. And I know you have some really good content on that I want to be sure I mention later. And as far as annuities, I think most of us have a sense that those definitely aren't built with our best interests at heart. And but you did say, you're not totally dissing them. You said, the right annuity could be right for the right person at the right time. So really it's making sure that you're getting sound advice from somebody besides the person selling it to you. Would that be accurate?
I would say that's definitely a big part of it. But the other part is, okay, what are the alternatives to annuities? And just to give you a real quick soundbite on it, annuities are really for someone that just will not spend time or energy trying to really understand their finances and their investments, and they're a failsafe for someone that isn't going to put the work in. But it's like taking a pill instead of doing the exercise, right? It's not usually the best plan. It's just a plan that can work for someone that's got a lot of fear and just wants to feel like things are happening. But really, they can be quite costly and not usually, in my opinion, the best alternative for most people in most situations.
Okay, thanks for clarifying that. So I know a few things about your software platform, the Harvest Plan, and how it can help consumers and investors navigate those obstacles on their own with clarity, organization, and the the powerful decision-making tools that it has. Before we get into those tools that make the Harvest Plan unique, tell us what inspired you to create this.
I love that question because now you're starting to get into my passions, and because it was quite a project to create, and there's basically I have a set answer for that. There's two answers. One, my institutional journey through investments, insurance, real estate, mortgage, through the financial industries, where that journey that I took was the same through a variety of different financial professional institutions. And when I say institutions, I mean mortgage, banking, investment institutions, because I worked for several Fortune 500 companies, all of whom, when I was going to college, I wanted to be in financial planning, and I thought I would be advising people on their financial health and helping them do more with what they have. That's what I always thought it was. But as I journeyed through several Fortune 500 companies and several different industries, I found that they were all doing the same, which is, how do you sell more of what you have? And I found that they all are just pushing their round peg into a square hole, or vice versa. In other words, it was more about how do we sell more of what we can sell, as opposed to how do we help people be healthier, learn more, grow more, and be as healthy as they can be, regardless of what we have to sell them. And I don't want that to be misunderstood. It's not necessarily because the institutions are out there to try to do wrong or evil. They're trying to do the best with what they have. But the problem is, if a realtor only has real estate to sell someone, well, they're going to probably sell more real estate than a person really needs, because their goal is to maximize their financial life. Same thing with a life insurance person or an investment whatever we are. We all, people out there that are not in the financial world, they're selling stuff too. They have jobs and they want the company to do well because they'll get a raise, and that's how humans are. But the way that ultimately the industries get shaped through these human endeavors is not necessarily because of or for the best interest of the consumer. The consumer really has to look out for themselves. It was that my journey through these industries were not making me feel like the industries were really trying to do the best thing for the customers. The second part would be watching the NEGAM and real estate bubble follow almost immediately right after the dot-com bubble, and watching so many people get killed, large companies getting richer, and almost no one having to take accountability for what happened. And it was one giant bubble after another, and so much greed and so much lack of consumer understanding, and so much hurt caused by institutions you would have felt were smart enough to avoid that sort of thing, but they weren't. Neither in the investment industries in the late 90s, early 2000s, or in the real estate and mortgage industry. Two big bubbles. People should have known, and I think a lot of people did know, but while the greed was making people happy, people just turned a blind eye to it. So after those two things happened in succession, being involved in those industries and hating it so much for what happened, for the result, that motivated me, inspired me to do something to help the consumers know and understand things better and be able to put themselves on better ground and be healthier financially overall.
Oh, that's a great story. Now, I want to clarify something for our listeners here. You mentioned NEGAM, and you were talking about negative amortization. When we talked about this before, you really opened my eyes. Like, I was focused on the 2007, 2008 crisis as, well, it was the subprime debt that got packaged in the CDO hedge funds. But you really point out that the driver of subprime was the negative amortization mortgage financing that the banks were doing. Can you explain that a little bit more?
Yeah, so I owned a mortgage company in the early 2000s, still do, but had a number of people working for me. I saw it close up. I had big banks were coming in, whether it's, you might remember some of these names, Washington Mutual, World Savings, Downey, Countrywide. There were so many banks coming in and telling us in the mid 2000s, 05, 06, start selling neg Ams. That's what everyone's doing. You can make 3 points on the back end. And basically what was happening is the real estate market started inflating. And then once it got to a certain point, these banks that were pushing neg Ams, meaning instead of paying your loan down, you're paying less than you have to pay to cover the interest. So your mortgage balance is going upward and getting larger, instead of going down over 30 years. They're amortizing negatively. So what did that do? What it meant was people could buy a lot more house for the same income, because income also was not being verified. But with the negative amortization, the payments were so low. After the market got overly inflated, it pressed on another couple of years because people then just started buying negative amortization loans. It took over like 40 or 50% of the market, the purchase market in general. So even people in 30-year fixed loans having they had a hyperinflated real estate value in their home. The whole country was hyperinflated in real estate because those neg Ams allowed people to keep increasing the purchase price higher. And so when things fell apart, they fell apart way worse than they ever needed to. And I'll probably go to my deathbed thinking, well, subprime is an easy way for the large banks to say, well, there were all these people doing these subprime. In my mind, the whole subprime thing is more of a marketing tool that they use to get out of it and say that there were bad loans in general. But these negative amortization loans pushed by most all of the big banks except for Chase. And Chase is one of the banks I liked at the time because, like me and my mortgage company, we weren't doing neg Ams. We felt like we would tell people, if you need to sell your house because things are getting tight, then sell your house, but don't do a neg Am because then you're going to lose your house and the equity in it. Chase also did not do neg Ams at the time. And they took over the national landscape in banking shortly after 2008 because they were not leveraged like all the other banks were.
This is great. Every time I hear you tell this story, it's just so fascinating to me. It's the thought that came to mind just now is like the neg Ams were like a virus, that just spread within, the system.
Well, you know what? Think about it. If the lenders were making, the ones that were participating, which I'd say were 95 to 98% of them, all right, if they were making double the amount of commission per loan and the buyers saying, yeah, I'll do that, guess what? They could buy a house for less than the monthly payment they do on any other loan and be able to afford that house that they fell in love with. You got greed going on both sides. You got the lenders offering greed opportunities to the consumers, and they're both feeling like they're getting a freebie. And everyone's happy. So, it wasn't just the lenders. It was the consumers, too, and everyone in between, because everyone was getting business and getting fat and happy. And, well, that can only go on for so long, as occurred just 7 years prior in the dot-com bubble. Same exact thing.
Amazing stuff. Just we'll be talking about it for decades to come.
Yeah.
Especially if we don't learn from it.
Yeah.
All right, so I want to talk about the Harvest Plan software. And, I had a unique experience with you where you walked me through how to look at a mortgage refi. And it was really an incredible experience because in one window on a platform, we did it on an online call, and you just showed me how to put my information into the tools and then run all these calculations, and not just run the calculations based on my income, the house value, the interest rate, what rate I might get, but it also calculated out different scenarios that I could choose from based on what I wanted to do. And that was so impactful, especially when you showed me how just making a little tweak with the rate on my refi or anything to do with the balance or the term that or paying down debt, right? Like if I took money out and paid down credit cards, that I could reinvest that money, at a higher rate and significantly, like in a huge way, change my retirement outlook, even just 10, 15 years from now. And that's what I saw is so powerful about this platform. So tell me, what are the 3 top benefits that you believe a household will immediately gain from using this platform to record and manage all of their financial info?
Well, I think they're closely related to the problems that you asked me earlier. What are the big problems? So one benefit clearly for almost everyone that uses it is they get a sense of organization, because it helps people organize all of their documents and then really see and understand, organize all of the information, their financial information, their investments, their mortgage, their budget, everything. So the organization bleeds in probably to the second one, which is clarity and understanding. Because if you don't see things clearly, let's just use darkness as a great example. That's, fog or darkness is when we don't see things, and that's synonymous with having fear. When we walk into darkness or we're feeling a fog, we're feeling fearful, we're feeling anxious, we're feeling like we don't want to keep moving forward. So to get clarity through the organization, that then leads to understanding also, because once you can see it clear and you understand it, what you have exactly and how one area of your finances affects another area and how to do the math, that clarity and understanding, it just leads to the next thing that the software probably offers, which is inspiration. Because once you start seeing things and understanding things clear, you start getting inspired to act instead of feeling like you want to procrastinate or put something off or shove it to the corner or under the rug or to another date, a time in the future. Once you start getting a handle on something, you get good at something. Even when you're a kid, you get good at music or science or baseball or whatever it is that you're good at. Once you get good at it, then you start getting inspired to do more and more of it. So that, it starts with organization, it delivers, that leads to clarity and understanding. And then that actually leads to inspiration. And eventually, what you need to do financially, and you can have the trust and confidence that you need. So whether you're doing things on your own or you're dealing with your financial advisors, your insurance agents, your investment advisors, your tax guys, now you understand what's going on, and you're not a victim. You're not a slave or a subject to that person that you just wind up having to trust, because you can have a quality conversation, understanding where you are and being able to make decisions knowing they're good decisions.
This is good. I was just making notes and you sort of already summed it up, but organization leads to clarity and understanding that lead to new inspired actions with your finances. And I think that's fantastic.
And now, think about this, Kevin. That's how it is in every area of your life, in your health, in your marriage, in your work. You have to start with the assessment and getting organized. Then you have to start understanding, okay, how do we move forward? And then once you start moving forward, then you get released to become successful.
Powerful stuff. So now I can't imagine that we gain all these benefits, like they build slowly over time, just like building a muscle. You talk about that,
That's right.
Muscle building. So a natural question would be, okay, this is software and I have to put my information in. How difficult is it to learn it and use it? What's my time investment to get these benefits?
That's a key question, because that's one of probably the 2 biggest, or at least 3 biggest reasons people don't move forward. Because one, how much time is this going to take me? So that's a great question. The software is built to work in one of 3 different ways. Basically, you can do it program by program. You can do it in a very organized, sequential, 10-minute per week money muscle building methodology, where we give someone a task, 10 minutes every week, 15 max, sometimes only 5 minutes. It's almost like going to the gym once a week, but you're just really sitting at your computer and doing an exercise once a week for 52 weeks. It's organized, goes through everything. Or for those that are more CEO type, A-type people that just want to move and get going on it, there's something we call a CEO board, where you can see your whole financial life from the top down, bird's eye view, and specifically modify or address any financial element that you want to based on what it shows you as strengths and weaknesses, or areas that you just really want to dive into. So there's 3 different ways to use it. The program by program way is, okay, I want to get out of debt, or I want to do a financial plan, or I want to organize my docs, or I want to do my retirement planning or budgeting. There's programs for each area. If you just know what you want to do, then that program is in there. Even credit repair program, anything financially. So program by program, 10-minute a week, that's one 10-minute a week plan, or the CEO board plan. And you can really spend as much time as you want in whatever methodology that works best for you.
All right. And we've talked before that, at the minimum, somebody could get started with, just dipping their toe in 15 minutes a week. And after a month, they would already start to have more clarity and confidence and understanding.
That's right.
Yeah.
They would start that organization, that building. And the other thing that's important to point out, it's not like watch a video once a week and something will occur. This is all organized so that you're actually building. You have a tool and a workbench where you're actually building financial strength brick upon brick upon brick in an organized way. It's not like, well, you're trying to cut a coupon here or spend less there. It's not willy-nilly. It's all organized in a sequential building block methodology. So it's way different than just saying, well, I'm going to look at my budget every week now, or I'm going to, spend some time looking at some YouTubes. No, you're actually building. And since you have this platform and this tool or workbench, whatever you want to call it, you're actually building your financial house brick upon brick over time.
All right, you mentioned some of the major programs within the platform, like there's a debt elimination one, there's a credit repair one, there's retirement planning. But I think you like to start people off with the financial power game plan, which is like a 60-minute walkthrough to get them going. Can you tell us more about that?
Yeah, you know what? If someone could just commit that 60 minutes, and it's really easy. You just follow right along with the video. You're using your portal or your tool right there, and you have your own financial plan online. You're building it slowly but surely and understanding a little bit more than you did before about each element of your finances. And when you're done, you've got a tool that's now meaningful to you and gives you all the insight you need as far as where are your strengths and weaknesses and what should you start looking at more or less. And your finances just become alive, and it's not a 30 or 50 page paper report or PDF that you get. No, you actually wind up with a tool that's ongoing and that you can manipulate and utilize. And boy, I just encourage anyone to start there, because that 1 hour will change your life, and it will change the direction and destiny of your finances forever if you just put that 1 hour into that financial game plan program. And that would be the place I would encourage most people to start.
And you're going to tell us later how folks can get a free trial and with no obligation and just jump in and take that seminar and start applying it. I want to go back to the mortgage refinance, because, again, that was such a powerful thing for me to see, especially since I had you on the line with me, walking me through it and putting my information in. And just that element of, here are the variables we can play with, and these create different scenarios. For instance, how much debt I want to pay off, and lower my overall interest expense. In fact, you create sort of a weighted average of what I'm paying in interest versus what I could earn on my investments. And then just seeing how we can play with those scenarios. And it just blew me away that, a couple of small tweaks, if I stuck with it for 10 or 15 years, would just dramatically boost my retirement account. What more can you tell us about that? Because I don't even know if I'm doing it justice trying to explain it myself.
No, you're doing a good job. Yeah. I mean, this goes back to one of your early questions about, what are the biggest problems in that not doing the math. It's not only not doing the math, but as I mentioned previously, It's not knowing what math you could be doing. And why don't people know? Because there's no tools out there to really help people see, wow, if I did just this much. Someone told me, a lot of people will say, well, I heard it's not worth refinancing if you can't get at least a half a point or 1 point or whatever their rule of thumb is that they come in with. But they have no idea that over time, if they were to invest the difference into their investments or pay this off or pay that off or restructure their loan, the math is so much, it can be so much more impactful if you can think beyond, well, what's my payment or what's your rate versus my rate? When you have a machine that can do math at a much higher and more advanced level by you just clicking save and calculate, and you can see where one refinance option could literally be hundreds of thousands of dollars better than a different option.
Yeah.
Because you've added in your investments or your debts or other stuff and reformulated and manipulated the numbers in a certain way. It is, like you said, it's really magical and very impactful for people.
Yeah, I can't emphasize this enough. I mean, for this alone, anybody who's 45, 50, and you've been thinking, oh my gosh, at this rate, I'm going to have to work till I'm 70. And right now we're experiencing a little downturn in the stock market, which gets people thinking about that, right? There yep. goes a chunk of my wealth. I can't recommend enough that people do this so that they can see how much power you have now, how it's like you're turning those levers, or you just have a bigger lever on the future, and you could really change your retirement outlook 10, 15, 20 years from now.
It's unbelievable. And I used to have on the front of my website that we guarantee will change your financial destiny by at least 6 digits. And sometimes it's 7. And it's not that uncommon, believe it or not.
Right.
If you really go through the program and you start getting involved with it and tweaking each of the different areas that we show you how to tweak, changing your financial destiny by 6 and even 7 digits is not a stretch for most people. They just haven't put that effort in. They haven't done the math. All the things are not organized. All the things you asked me at the very beginning, what are the biggest flaws? And because people don't do all that and they don't realize the opportunities that they're missing, they're subject to a far lesser financial future than they could otherwise have.
Yeah. So I want to tell people about the educational series you have about the evil science of credit cards. And I'll mention that in a minute, but I mean, this has been a great conversation. And so I want to tell people how they can get access to a free trial to test out the platform and just see for themselves, like if what I'm talking about makes any sense. And the cool thing is if they do the trial, they don't even have to, I think you have it set up. You don't even have to put it in a credit card, and they get immediate access to all the training videos. So they can start with anything or just test out all of them and get all the MoneyPlan coach tutorials. So they get acclimated and they can start implementing the strategy. So how do folks who want to try it out, how would they get started? How do they find you?
Well, we have 2 forms, and one is for consumers and one's for financial professionals who provide this for their clients. For consumers, for both, go to www.theharvestplan.com, theharvestplan.com. And consumers, it's very obvious, but consumers enter through the left side of the site and financial professionals through the right side of the site. And yeah, there's a free trial, no credit card required. Just go in there. We'll give you a username and password to set up your own portal, and you can do everything you ever wanted to do. We don't limit the functionality for the free trial, so people can really get their hands on what they want based on what they are really wanting to accomplish, whether it's debt elimination, retirement planning, investment, more investment planning and knowledge, whatever it is. We help people really start getting organized, understand what they're doing, and elevate their financial game so that they're not missing out on 6 digits or 7 of financial opportunity just because they didn't realize how much opportunity was passing them by.
Oh, that's good. I'm glad you mentioned that, people can start wherever they're at, because everybody's different. Some people already have some basics established, and they want to look at some more of the advanced training.
That's right.
Not everybody. It's not everybody's first day at the gym, so to speak.
That's right. Yeah, everyone enters the gym in a whole different level of health.
So, and speaking of education, we talked about how you teach consumers about banks, and I love how you talk about banks. It's basically, banks, they never lose money because they're just so good at how they analyze statistics. So they, even though we hear about people defaulting on credit cards or defaulting on loans or getting their house in foreclosure, and we think, oh my, the banks, they really must lose money on all this. And you've taught me that the banks never lose. And so I know one education series you have is about, you call it the evil science of credit cards. So I say we have you back on here in a month or so, and we dive into just that topic, the evil science of credit cards, because it actually becomes like a half-hour conversation the way you explain just how banks operate. And so that blew my mind. So I want to have you back on to do that one.
I'd love to do it. That's one of my fun topics, and that's one of those ones where the understanding really does lead to heavy inspiration. And
it's the biggest one. When I say it blows my mind, how the banks just have the math calculated out so well so that they don't lose. But I also, when you listen to the conversation, when Mark and I talk about it, you'll wonder, as I did, oh my gosh, they're really taking advantage of the people who can afford it least. The people who get hurt the worst by credit cards are the people who can afford it least. And it's really a shame. And so, you know what? We're not going to take on the banks directly, but if we can educate people and help them so they don't fall victim to these traps with all these credit card offers and the never-ending treadmill that a bank can put you on, we could change a lot of lives, I think.
Absolutely. And I'll tell you what else, Kevin, the flip side of that video is do what the banks do. So the problem is so many people do opposite what the banks do. And even the people that aren't doing opposite what the banks do, so many people, the other half or almost all of the other half, they're not realizing that they could do what the banks do, but not in an evil way, but in their own personal opportunity way where they're not hurting anyone at all, but they're still using the same data, statistics, and methodology to do what the banks do so that they can enrich themselves by just having a better methodology and understanding
oh my God,
how math works.
I can't believe I forgot this. Yeah, you teach something called Be the Bank. You want to teach consumers how to be the bank themselves. And that it's almost a description of what you showed me with the mortgage refi. If I can pay off this higher interest debt and then reapply my cash flow to my investments, that way I'm borrowing cheap and earning at a higher rate. And that's the way I become the bank.
That's how banks get rich. Why don't we do it?
Yeah, exactly. All right, Mark, great conversation here. Remember, you can find, get a free trial to the Harvest Plan at theharvestplan.com. All right, Mark, we will talk to you soon.
Thanks, Kevin. Nice chatting with you.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.